Bank stocks fall as investors fear a big jump in bad debts. House prices set to tumble, and why airfares are so high at the moment. It's Friday, the 10th of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, look, I'm sure you're going to enjoy this morning's chat.
I certainly am.
It's with Lucy Bingle, yes. She's a total expert on LinkedIn.
Which is one thing that we cannot say about you, Sean.
You're always criticising me for my lack of usage of LinkedIn. And one thing that Lucy talks about is if you want to run a business and you want to get business, use LinkedIn. It's amazing what a great business tool it is.
Yeah, it's a fantastic networking tool. It's a great way to kind of promote what you're doing and make new connections. And look, I shouldn't be so cruel to you. You have a LinkedIn profile. You've got your picture up there. There's not a great deal more than that, but after listening to Lucy and after talking to Lucy Bingle, I've got high hopes.
I'm inspired.
It's worth sticking around for. It's a good chat. It's coming up a bit later on. But Sean, the main story this morning, bank stocks have been dumped by investors. They're really fearing an outbreak of bad debts in the sector with interest rates rising.
Yes, the sell-off has been quite remarkable since the Reserve Bank pushed up the official cash rate by 50 basis points on Tuesday. Since Tuesday morning, Westpac's share price is down 10%, including a 3% fall yesterday, and Commonwealth Bank and National Australia Bank's share prices are off 9%, including 2% yesterday. ANZ is down 5% and it fell 2% yesterday as well. The four are all top 10 companies and their performance has weighed on the bourse. The falls in recent days has meant that ANZ has shrunk to be the 9th largest company on the bourse. It was 7th, behind Woodside Energy and Fortescue Metals. Most of us hold banks in our super funds, so their demise will hurt annual returns, which we find out about at the end of the month.
Sean, you might have to explain to me exactly kind of why they're falling, because taking a fairly, almost probably a slightly simplistic view is I thought they were supposed to benefit from higher interest rates.
Theoretically, they should. That's exactly right. Because the big lenders can use deposits as a funding base, rising interest rates should bolster their net interest margin. Now, that's the difference between what a bank pays on a deposit and gets on a loan. It's effectively how they make money. But that good news for bank investors has been overwhelmed by the sense that the banks are going to be stuck with a bunch of bad loans because people won't be able to pay their debts back as rates rise and the cost of living increases. That whole feeling.
Right. Does that make sense?
Well, it's arguable. Aussie banks rely heavily on home loans as opposed to business loans or commercial loans. In the US and UK, banks rely a lot more on that sort of lending. Home loans generally get paid back no matter what the economic cycle. But the decision by the Reserve Bank to lift rates so sharply this week seems to have sent investors into a tailspin, and they just really are focused on this bad debt issue. We haven't seen it yet. In all likelihood, we won't see it for a while, even if it does eventually come out. It's really quite incredible that these bank stocks have been sold down so hard, 9 and 10% in 3 sessions. Quite incredible.
Yeah, it really is. And the banks obviously make up a fairly decent chunk of the local bourse. How did the market perform yesterday?
Well, the S&P ASX 200 closed down 1.4% to 7,020 points, its lowest level in a month, mostly thanks to the banks. It fell early, then it climbed back only to be sold off in the final few minutes of trading. BHP led the big miners lower as well. The real estate, industrial, utilities and technology stocks were also weak. In fact, only the energy sector ended in the black yesterday, led by Woodside Energy, which was up nearly 2%. It was a tough day for lithium stocks. Pilbara Minerals finished down more than 5%. Liontown Resources and Allkem were both off more than 4%. Lithium prices have soared over the past 12 months, and the debate in the sector is that given greater supply, prices will come off. The counter-argument is that lithium still has growing demand, and where there isn't excess supplies in high-grade lithium, which is where most of the Australian companies operate. Magellan Financial Group got a boost yesterday after co-founder and former CEO Hamish Douglass, who had stepped back from the business for health reasons, said he'd come back as a consultant. Its share price rose 2.2% and was one of the best on the day. In the bond market, I know you love the bond market, Michael.
I sure do love the bond market, Sean. Please go on.
10-year yields hit 3.6% before finishing a touch lower. That's an 8-year high. Now, bond yields really matter because almost all of us invest in fixed income products like bonds via our superannuation fund. They're very, very safe investments with government bonds backed by governments. We haven't received much of a return from them for many years, though, as interest rates fell. But with interest rates rising, so too are bond yields, which is a way of measuring the return of bonds. They're becoming a much more attractive investment. With a bit of luck, Michael, I'll be able to talk much, much more about bond investments in the future.
Yeah, and Sean, I particularly love the fact that you felt it necessary to clarify that government bonds are backed by governments. And I feel like that was aimed at me, maybe.
I'm preaching to everyone.
Oh, thanks. Thank you. All right, we'll be back in a moment with the rest of the day's business news. Sean, the country's biggest home lender, Commonwealth Bank, thinks Sydney house prices will fall by 11% this year and that Melbourne prices will drop 10%.
No one should know the market like Commonwealth Bank, given its status as the major lender in the country. It believes prices will not only fall this year, but in 2023 as well. And across the 2 years, homes will fall by 18%. That's a big drop. The group's head of Australian economics, Gareth Aird, said the RBA's decision to raise the cash rate by 50 basis points this week indicates the board was front-loading the tightening cycle, and that will hit prices hard. Commonwealth Bank expects the cash rate to be more than 2% by the end of the year. Now, across the nation, house prices are forecast to drop 6% this year. Brisbane and Adelaide houses will appreciate this year, but then drop by around 10% in 2023, Mr. Ed says. Hobart, Canberra and Darwin, prices there are all expected to decline slightly this year, but then tumble 9% next year.
Okay, now the federal and state energy ministers have released a communique following their emergency meeting this week, though renewables and storage don't really get much of a run.
No, it's somewhat surprising given renewables and storage are very much the future of energy. Anyway, the communique says proposed electricity market reforms will need to embrace natural gas and potentially coal while the transition occurs, and if we want to avoid blackouts. It outlines an 11-point plan and gives the Australian energy market operator the power to buy and store gas. Energy Minister Chris Bowen said the meeting had made good progress in tackling the energy crisis, but he was very dismissive of nuclear energy, which is something the federal nationals have been pushing. Following the release, the Australian Energy Regulator Chairwoman Claire Savage said coal and gas were important fuels to deliver dispatchable capacity, and it would be more difficult to manage the transition without including them in a mechanism. Michael, my 2 cents worth on this. I think the governments, that state and feds, are becoming much more pragmatic about the transition. Gas is here for a long time yet. That is going to be unavoidable. The great unknown is just how much support Canberra gives renewables, including battery storage players.
Okay. Sean, the Victorian and New South Wales casino watchdogs have given the green light to Blackstone's $8.9 billion takeover of Crown Resorts.
Yes, the deal is finally almost done since shareholders, including James Packer, have voted for the bid. Crown's share price jumped 2% yesterday. It's now trading close to the bid price. The Western Australia regulator is expected to give its view in coming weeks. That's what we're waiting on. Once that's done, a court date will be set to ratify the agreement. In essence, the state regulators found that Blackstone is suitable to hold a casino licence, including in New South Wales.
Sean, I love the fact that you qualified it slightly by saying the deal is finally almost done. There's still a couple of little kind of hurdles to get there.
So close.
Does it mean that the Barangaroo Casino in Sydney is set to open now?
Well, yes, though there were media reports yesterday that the New South Wales Cabinet was still debating the merits of having 2 casinos in Sydney. I kind of thought that debate had already been fought. In any case, it's probably only weeks away before the casino in Sydney gets approval to open.
All right. The competition watchdog, Sean, has raised concerns over Aurizon's proposed $2.35 billion acquisition of freight haulage group One Rail, saying it could substantially reduce competition in the rail industry.
Michael, there's a whole world of business out there which we never get to talk about. And bulk haulage by rail, fits into that category, really.
I love trains. I love trains and planes and everything. So I'm listening, Sean. Go on.
Well, the Australian Competition and Consumer Commission said that the deal would reduce the number of competitors in the supply of coal haulage in New South Wales and Queensland from 3 to 2, and that could lead to decreased competition. It's a really interesting battle. Aurizon suffered during the pandemic, and investors just don't like companies that rely on coal, given that sector is shrinking. Buying One Rail would help Aurizon expand into New South Wales from its home base of Queensland and also add other bulk haulage products like grain, copper and iron ore. It looks like there's still some way to go before this deal is done, and Aurizon's share price fell slightly yesterday but outperformed the market.
All right, just a few quick shorter stories, Sean. Graphite company Sierra Resources reported an insurgent attack at a mine in Mozambique, 200 k's from its Balama site.
Yes, the group has suspended personnel and logistics movements near the area, though the Balama operations weren't actually affected. Still, its share price tumbled by more than 9% yesterday.
The number of industrial disputes during the March quarter dropped from 55 to 30, according to the Bureau of Statistics. That's quite a drop.
It's a big drop, and it's back to where we were last year. The previous quarter was actually a bit of a high, but during the pandemic, these numbers are more consistent. Basically, there are about 12,000 employees involved in industrial disputes. That's about 1/5 the previous quarter, the December quarter, and around 9,600 working days were lost.
And finally, Sean, personal grooming retailer Shaver Shop says sales are up in the second half, with well-being and personal care apparently top of mind for consumers who are returning to malls to do shopping.
This one is for you, Michael. Have you ever used Shaver Shop?
No, actually, I tell you what, I was on their website about 2 days ago for the first time ever. So
it's a really fascinating, it is a very interesting store. It's got 121 shops, and it certainly suffered during the pandemic. It didn't have a great online presence, so it has built that out, or it's been forced to build that out. In-store and online sales are both up this half year. Apparently, Michael, people are heading out of their home offices and into work. They're ditching the beards and presumably the trackies.
Goodness me, not the trackies.
Yes, the trackies.
Oh, no.
They've gone.
Oh, well. All right, moving on to overseas news, Sean. Chinese exports surged in May, beating expectations, which is, of course, good news for the global economy.
Yes, supply chains started to return to normal after Shanghai and other cities emerged from lockdowns, and that triggered a 17% jump in exports. Imports were also higher. The figures were some of the first to show the world's second largest economy emerging from its most recent slowdown. It's important because many goods are manufactured in China, and supply chain problems have been a part of the global inflation story. If China can get going again, hopefully some of the pressure on prices will come off.
Sean, Apple is moving into finance in a big way, and we talked a little bit about this earlier in the week, but we now know a lot more. They're going to be offering loans through its buy now, pay later business rather than partnering with a major bank to do the lending part.
Yeah, so Apple will be making short-term loans, which is a very different business to designing technology. The general view was that Apple would partner with a finance company to do the lending bit. Apple Pay Later was announced earlier this week and will be accepted by the millions of US retailers that already take the iPhone's mobile and online payment service. That is some serious market power there. But Apple wants to do the lending itself, so it's kind of gone from a technology company to a music company, then into media and TV, and now into finance.
That's pretty extraordinary, isn't it? Now, anyone traveling overseas, Sean, knows how expensive airline tickets are at the moment. And apparently there are a bunch of reasons for it.
Yes, I like this story. Firstly, there's what's been termed revenge travel. People have been grounded for so long during COVID, they're prepared to pay higher prices. According to Bloomberg, fares this northern summer are likely to be 30% higher than normal. And like Australia, people have accumulated savings during COVID and they want to spend it.
Revenge travel sounds very, very aggressive, doesn't it?
It does.
Sounds like people are really angrily clicking on the Qantas website, just furiously trying to buy flights.
Perhaps they are. I don't know. Second, there's still a bunch of jets parked around the world waiting to rejoin global fleets. It just takes time to get fleets back in the air, especially the bigger and less fuel-efficient aircraft. Third, fuel prices are soaring thanks to the war in Ukraine and carriers are passing the costs on. Fourth, with hundreds of thousands of pilots, flight attendants, ground handlers, other aviation workers sacked in recent years, there's just not enough staff to handle demand, and that's slowing things down. And finally, the carriers themselves need to repair their COVID-hit balance sheets, so they're quite happy to charge higher prices. Now, prices will eventually come down, but not while passengers are prepared to pay up.
You know what I'd like, Sean? I'd like an update on a story that I think we talked about probably a year ago, and you mentioned all the jets that are just parked waiting to rejoin fleets.
Yeah.
And we talked about a year ago about Qantas employing people to scare off the rattlesnakes that were attracted to the A380s that were parked in the Californian desert.
Yeah.
I'd love a rattlesnake update. Did they manage to scare them off?
Oh, I don't know. I don't actually know how many Qantas aircraft are still parked. I'm sure some of their bigger aircraft still are. I'll check it out. I'll come back to you.
That's quite a homework task I've set you there.
It is.
All right, up next is the Fear and Greed Daily Interview, and today you're speaking with Lucy Bingle, who is essentially a LinkedIn expert.
That's right. As we mentioned at the top of the show, if you want to know all about LinkedIn and how you can use it to improve your business, this is the interview for you. I'm going to re-listen to it because I certainly need it.
I agree with you. That is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 10th of June, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.